Assalamualaikum. My name is Nurul Natasha.
My name is Faqihah Aniqah binti Muhammad Fadhli.
Assalamualaikum, my name is Farisah Atiqah.
My name is Khadijah Nabilah binti Baharum.
My name is Misha Nadira binti Muhammad Sofian.
So for today's forum discussion, we're gonna have a topic of financial institution, which have functions of central banks, function of commercial bank, situation of financial collapse in US in 2008, and how monetary policy being used to overcome the problem. So, Khadijah, can you give 2 points of central bank?
Sure. First, functions of central banks are to promote monetary stability and a financial structure. BNM supervise banks to ensure they operate in a sound and prudent manner as it is necessary for the effective monetary policy. The second is financial advice and counselling. BNM has also established the agency Counselling dan Pengurusan Kredit (AKPK) to help consumers manage their debts and become more self-reliant in their financial affairs and thereby preserve the resiliency of the household sector in the economic growth process.
What about you, Farisah? What is the function of central bank?
So one of the functions of central bank are to issue currency and keep reserves safeguarding the value of the currency. Basically, they circulate and maintain money because they cannot simply print money as the currency value will go decrease. Second, to act as a banker and a financial advisor to the government, which means the central bank which will keep the banking account of the government and provide few services such as check facilities, accept funds, and make payments on behalf of the government.
Next, what is the function of commercial bank, Misha? Can you give the function?
One of the functions of commercial banks is that they provide loans and advances. Commercial bank provides loan services like housing loans and car loans to individuals. Loan given will be charged an interest rate so bank can earn profit. The next one is providing other banking services and facilities, such as internet banking and foreign exchange transactions.
What is the other function of it, Faqihah?
Thank you for the question. Another function of central bank is accepting deposits. Commercial bank accept deposits such as current, saving and fixed deposit. Individuals save money into saving account to enjoy some interest while enjoying higher liquidity of money. The collected deposits are then lent to traders and consumers. Second is to facilitate business and economic transaction by providing a mechanism to pay or move funds. For example, usage of check and credit card increases from time to time. Thank
So
you.
as as we all know, Central Bank of Malaysia is Bank Negara Malaysia, which is the function is financial advice and counselling to promote monetary stability and financial structure, to act as a banker and financial advisor to the government, and lastly, to issue currency and keep reserves safeguarding the value of the currency. While the commercial bank is a private sector and it is a profit-making institution where the function is accepting deposit, providing loans and advance to facilitate business and economic transaction, and lastly is providing other banking service and facilities. So we're gonna move to the next question, which is the situation of financial collapse in US in 2008. Misha and Khadijah, can you guys discuss and evaluate about it?
So, while the prices of housing were still high, many American and European firms, including banks, invested in subprime loans. Those investments give the loaning companies more money, which they use it to give out more subprime loans. These investments would make a lot of money as long as the house prices were high. The housing firms, however, were constructing too many homes. As housing costs began to decrease, mortgage-backed financial securities encountered huge losses. By early 2008, losses on these securities were evaluated to be around $500 billion. The decrease of housing causes led to a sharp increase in unemployment. Throughout the US, more than 8 million people have lost their jobs. about 2.5 million businesses have been destroyed, and in less than 2 years, almost 4 million homes have been foreclosed.
Within the interest rate spreads between secure and unsecured financial instruments, one signal of the resulting credit market disturbances shows up. For example, the TED spread is the spread between the interest rate on interbank loaning and the interest rate on 3-month US Treasury bills. The TED spread provides a counterparty risk assessment from one bank to another, which reflects both liquidity and credit risk concerns. The Federal Reserve brokered an agreement for JP Morgan Chase to purchase Bear, which was not unprecedented but also included $30 billion of toxic assets from Bear Stearns as part of the agreement. The final question sometimes raised is that monetary base expansion would potentially be inflationary, although this is unlikely to be the case in the current setting. It is because banks are able to keep large quantities of excess reserves.
On September 15, 2008, Lehman Brothers, the fourth largest investment bank, filed for bankruptcy after enduring misfortunes in the subprime industry. Numerous commentators contended that the choice to allow Lehman to go bankrupt was a colossal error that turned a slight financial disruption into a global financial crisis. It's hard to contend with hindsight that the correct option was to allow Lehman to go bankrupt. But it is worth noting that there was a strong argument at the time to let Lehman to go into bankruptcy. Although Lehman's bankruptcy led to a substantial increase in uncertainty and a wave of distressed security sales that caused asset prices to collapse and liquidity to dry up, the three events that followed after were at least as important in causing the subprime crisis to globalize.
The Financial Products Unit of American International Group (AIG) had written insurance contracts worth over $400 billion called credit default swaps, which had to make payments when subprime mortgage securities suffered losses. With the collapse of the Lehman Brothers, it seemed more likely that, under these contracts, AIG might have to make huge payments so that short-term funding to AIG dried up. The Federal Reserve joined on September 16, 2008 with a $85 billion loan to hold AIG alive, with overall Fed and US government loans ultimately increasing to more than $170 billion. The effect of the crisis is AIG's employee base fell from 116,000 in 2008 to 56,400 in 2016 because of the crisis. It is cutting costs and selling assets in order to simplify and render profit again.
On the same day of the AIG collapse, the US also witnessed a run on the Reserve Primary Fund, a large money market fund run by Bruce Bann. $785 million of Lehman paper was owned by Reserve Primary Fund. With the bankruptcy of Lehman, the fund could no longer afford to redeem its shares at $1 per value, and shareholders pulled out their capital, with the fund losing 90% of its assets. It was followed by a run on other money market funds, and this puts pressure on the banks as a significant amount of bank financing came from commercial bank paper and deposit certificates held by mutual funds on the money market.
In October 2008, the United States Congress passed Troubled Asset Recovery Program (TARP) bill, which unconditionally bailed out the largest banks in the United States in terms of market share. The TARP bill's budgeted expenses was $700 billion. TARP legislation would help bail out banks at the tax-paying public's expenses. The bailout then shifted profits up the distribution from the tax-paying public to the executives of the big Wall Street banks that were bailed out. I believe that if there is a future financial crisis, it will cost American taxpayers even more than the $700 billion spent on the 2008 bailout of the too big to fail financial institutions. The bailout money also went disproportionately towards the biggest banks, since the TARP bill gave big banks a competitive edge in credit markets. Hundreds of smaller regional banks have gone under.
Thanks for the information, Misha and Khadijah. As for the monetary policy, how is it used to overcome the financial collapse? Farisah, can you discuss about it?
Yes. So as we know, monetary policy is actually a policy which employs the central bank control of money supply or interest rate to achieve macroeconomic objective. So, as per discussed earlier, US is having a great recession between 2007 to 2009. Hence, we're going to use expansionary monetary policy. So a few ways to overcome it is first by increasing money supply in economy so that the economy will not stiff and move as there will be cash inflow and outflow, making loans less expensive to obtain either by the commercial bank or the public. So second, decrease interest rate that commercial bank charges on loan to publics. So as a result of this, the cost of borrowing become cheaper and more public can apply for loans. So third, release rules and regulation for hire purchase loan application, and lastly, decrease cash reserve requirement by the commercial bank, as it will allows commercial bank give more loans to borrowers. So by making these loans, bank will create more deposits, hence the money supply will increase. Thank you.
So, Faqihah, what is other monetary policy to overcome the financial collapse?
Alright, thank you. As we know, the US microeconomics problem more to unemployment that Farisah already explained earlier how to overcome it. So, if inflation happens, the central bank will use contractionary policy to slow economic growth. The ideal economic growth rate is between 2 and 3%. If higher than that, demand will drive up the price. The federal can slow this growth by lowering the supply of currency and making loans more expensive to obtain raised interest rate, raise cash reserve requirement to decrease amount of loan to public and move aggregate demand to the left. So when economic growth and demand are slow, it will put down pressure on price. Other than that, monetary policy will selling government securities to influence the size of bank deposits. That will reduce their capital and giving them less to lend. As a result, it can charge higher interest rates and slow economic growth and most up inflation. Lastly, under contractionary, monetary policy will restricting the higher purchase regulation. That's it.
Okay, overall, as for the financial collapse, there are 6 reasons, which is have said by Misha and Khadijah, which is one is French Bank Paribas, State Spread, Lehman Brothers, the IAG collapse, Reserve Primary Fund, and TAP. While for the monetary policy, it is increase money supply, decrease interest rate, decrease cash reserve requirement, and lastly, relaxing higher purchase agreement. It also for monetary policy, inflation also can be used, which is reduce money supply, selling government securities to influence the size of bank deposit, and lastly is restricting the higher purchase regulation. So I think that's it for today's forum. Thank you for lending your ears.